Okay. Hello, everyone. Good morning. Welcome to the Prosperia stage. We're going to get started with our go-to-market stage. We're going to be covering everything from hype-based marketing to merit-based fundraising. It's going to be a packed schedule, so if you are wanting to listen to the go-to-market stage, please take a seat here. And without further ado, I'm going to introduce our first speaker for the day, Ev, who's head of operations at Legion, and is going to be taking us through how merit-based fundraising aligns projects and investors. So, Ev, go for it.
Hello, good morning, everyone. Are we doing headphones or no headphones? 1, 2, 1, 2. Yeah. Mic check, mic check. Yeah, good, all right. Yeah. All right. Okay, cool. I think I'll just roll. Morning, everyone. Thank you guys for coming. We have like 6 people in the audience. Strong bear market vibes. Mom, if you're watching it, love you. Cool. So we're gonna talk about my favorite topic, fundraising. I guess if you're guys building, you need funds, and there are different ways to raise them. So I'm gonna cover our new approach to public fundraising. So my name is F. I run operations at Legion. So I'm going to start with some brutal stats. Last year, 84.7% of tokens now trading below the launch price. So pretty bad, and we believe that it's not a tech problem, it's pretty much structural problem. But why it's happening? So we try to dig deeper into the core reasons. If you look at the private markets, cap tables are selected by projects. So when you're a project, you're raising funds, VCs want to give you money, and then you try to select the best fund which aligns with where you want to go. And it's not only about the capital, but which value can the fund bring to you. And then long-term conviction is a big filter for which funds you want to select. So these things, they don't exist in token markets. Because normally when projects try to do a public sale with a token, it's a first come, first serve model, pretty much. Anyone can get in. If it's a hot deal, most of the allocation goes to bot farms and Sybils. So we just like try to dig some stats. 68% from big sales last year went to the bot farms. If it's not first come, first serve approach, then it's some sort of a raffle, filled from the bottom, some weird structures where projects don't have any control where the tokens will go. So there is no filter for merit or conviction. And then what happens when people or one user who has a bot farm gets the tokens, they dump them immediately on day one when TGE happens. So we believe that it's not about fixing your tokenomics or improving the product, it's better investor selection. So our philosophy is that we don't really care what's in your wallet. We care what you've built, contributed, and proven on chain. So we believe that tokens shouldn't go to the people who are the fastest, because oftentimes it's not people, it's just bots and scripts. Not to the richest, like the amount of ETH or Bitcoin in your wallet shouldn't matter, but people with verified history and a proven track record should get allocation. So to tackle this problem, we built a thing which is called Legion Score. So this score can be bought, borrowed, copied. It basically reflects your on-chain behavior, community contribution, and verified identity. So it's built on 4 pillars. The first one is cloud. It's when you create your Legion account, you connect your Twitter handle, and we score it based on your activity on Twitter, like how many followers you have, who are those followers, any projects following you, like do you have meaningful engagement. So you're getting the cloud score. Also planning to add Telegram to it, Discord, and score other social platforms. The second thing you can connect is GitHub, and then we're going to score GitHub based on your commits, contributions, contracts you deployed. and then you are getting developer score. And then the last but on the list is onchain score, so you can connect any number of EVM, SVM wallets. We're going to score all of them and give you the score based on the transaction history, protocol usage, and participation. And then the higher the score, the more access or bigger allocations you should get. So more opportunities for value-add network participants. We also recently introduced value-add score, which I'm going to touch in a second. So this is how your snapshot of the profile looks like. So you have your overall score, you have specific dev, degen, cloud score. So as you can see, I have a very low dev score because I'm not a developer. So my GitHub only got 260, but I have good on-chain history. So I have like pretty high degen score, and then I have okay-ish Twitter, and I get 860. Plus, we can also give you some achievements based on your activities. So for example, if you interacted with Wonderland in the past, then you're getting Fansar Sifu. Or if you claimed Arbitrum airdrop, you're getting this achievement. And then projects, when they're assigning allocation, they can filter by whatever they need. So this is a more detailed view of your user profile. You have social, developer, on-chain score, all your achievements, or all your past investments, number of smart followers, also like the smart followers who are registered on Legion, their score, and then your overall rank. So I have pretty good rank. I'm number 1026 out of 280,000 users. So top 1% on Legion, which means that when there is a new sale and I applied in the sale, I have a pretty high chance of getting allocation. So with that said, we also introduced value add score because we believe that not all capital is equal. Basically, based on your past track record when it comes to contribution to the projects, what do you do with the tokens when you receive them from the sale? Like, do you dump them immediately on day one? Do you go and stake them? Do you buy more on the open market? Your score, value add score changes. And then also it tracks all your previous Legion sales. So for example, my value add score is 594. So I probably dump some tokens because otherwise it will be 1,000. And then when projects are raising on Legion, they can select investors with the highest value add score because those people are more likely not to sell your token or just even buy more tokens on the open market. So some stats from 2025, we got 300 mil in deposits in the smart contract from all our sales, got to 280,000 registered users on Legion, and then launched more than 20 projects. We also publish all our post-TG sell data. Some of the sell data is not pretty, but what we're trying to do is be as transparent as possible and just show like what users actually do with the tokens after the sale. Couple of case studies from last year. So we launched this project called Yield Basis. So this was pretty hype sale. They were planning to raise 2 mil as a raise target, got almost 200 million in demand deposited in the smart contract in 24 hours from 68,000 people. It was 100x oversubscribed, so it was a very competitive sale. A lot of people wanted to get the token, and only, let's do some public math, like few percent of the participants managed to get the token. And some social scores, they went like 7x in 1 week on Twitter. Cool. The next case study is a project called Sport Fund. They're building a fantasy sports product on Base. We did a sale together with Kraken. They got 3.5 thousand people who applied into the sale, but only 700 people got admitted based on the reputation and the Legion score. So it was, again, pretty heavily oversubscribed round. A lot of people want to get in, but only selected people got based on the value add score and also internal metrics from Sport Fund. So they also have their internal score, how many people use the product. But the pretty crazy stat is like how many tokens were sold on day one from this sale. It's 10.5%. I have, I think, a detailed slide here. So yeah, out of all applications, 600 people got accepted, 2.4 thousand got rejected, and we also identified almost 500 Sybils who tried to participate, which is like 12% of the sale. None of other platforms are doing it. So yeah, we're pretty proud that we've managed to cut those people and they didn't get allocation. And then investor behavior, which is, again, a pretty crazy stat, that only 10% of the tokens were sold, 5% of people held them in the wallet, 12 didn't claim it, 12% staked, and then 20% transferred to a different wallet. And then there's like the rest is vested. Because you as a project, what you want to do is to have as less sell pressure on day one. Ideally, you have you want to maximize the buy pressure and minimize the sell pressure, just supply and demand. And then we're also looking at some behavior based on the Legion score, how many people with the highest score, like what they did with the tokens. So for example, people with the highest Legion score, they are more likely to held partially. So people sell some of the tokens, but also held the rest in the wallet. And I guess just like high level where we're moving, so we are moving from being just a fundraising platform to becoming the world's first ICO underwriter, which means 4 things. One is sourcing and curation of those deals. Be honest, right now there's not many great projects you want to launch, and probably you don't want to launch mediocre projects. So basically we're spending tons of time doing due diligence and picking the projects which are worth backing. The second step is structuring the deal, because sometimes it's a great project, but the sale terms don't make any sense, or they're just like too expensive. So risk reward for investors is not there. So we're trying to negotiate the best deal in terms of pricing, vesting terms, and allocation, how much money a project wants to raise and can raise. Because what we've, I guess, learned last year is the best projects, they're optimizing not for maximum capital they want to raise, but it's more a brand building exercise. So they want to get as oversubscribed as possible, perform great at TGE, so everyone is happy, and it creates good optics for the project. Price goes up, best tech, good tech, people love it. So the sale itself, so we're working with Kraken right now as one of our distribution partners, so we co-launch sales with them. We're also adding new partners this year, so we're going to announce them soon across centralized exchanges, neobanks. And then the last step, which is pretty crucial for us, is TG support. It's, doing a successful sale is 50% of success, but doing a successful TG is a completely different ball game. Because normally the founders is their first token launch, so they don't know a lot of things like how to work with market makers, what's the good market maker deal, which terms for the exchange is worth accepting, how to work with liquid funds, etc. So we're trying to support them as much as possible, which is, again, it's not our core business, but them having a successful TG is a great optics for us as a project. And then, we work with Kraken closely, as I mentioned, and also we have a pretty great backers. So we have Vanek, Brian Howard, Delphi, GSR, Crypto.com, and Coinbase Ventures. So work closely with them on the deal flow and all those launches. Cool. The future of token distribution is merit-based. That's what we believe in. If you want to have a chat, if you have any questions, please hit me up on Twitter or Telegram. I don't know, we have 2 minutes left. Maybe if anyone has a question, maybe I can do one question if you guys want. If not, we're going to wrap it up. I think no questions? Awesome. All right. Thank you so much. Enjoy ETHDenver.